So, welcome back to the Everything Real Estate Show, ladies and gentlemen. Today we have Adam Nadler on the show, and he's a realtor from York, Ontario. Vision Real Estate is his company, and we're talking about everything from his career, from real estate, economics, Canadian American, central bank policies, inflation, all that kind of stuff. And we end up talking about digital currency, about Bitcoin. And it's a really interesting conversation. I enjoyed it a lot. I learned a lot about Bitcoin. I'm realizing now how naive I am, and trust that you guys will enjoy the conversation also. My name is Cody Krauss, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. Well, welcome back, everybody, to the Everything Real Estate Show. Today I have a guest with me, Adam Nadler. For anybody who doesn't know Adam, who is Adam?
So I'm a realtor out in York region, so kind of the northern end of Toronto, in the suburbs there. I cover a pretty broad area over there, and yeah, I've been doing this now for 10 years full time, which has been a wild ride. And I absolutely love it. I don't really do too much pre-construction or commercial. I'm basically all residential resale. And no, I absolutely love it. And I'm just kind of a nerd. So I like to post stuff on YouTube about my thoughts.
Cool. So how long have you been in real estate now, Adam?
So this will be going on 10 years.
Cool. What do you love about it?
Uh, I really enjoy working with end users. I used to run a big team a few years ago. It was sizable. We had, oh boy, I had three business partners. We had 15 agents, two full-time admin, and we were rocking somewhere in the vicinity of, I want to say, like 200 transactions a year.
Yeah,
Um, and frankly, that was miserable. Like I I did not enjoy doing that at all. And
it's
you're
more
you're
management and less end user.
yeah, like your job becomes babysitting other agents, and I really didn't enjoy that because you just get these weird questions of, oh my God, the client said this, what do I do? And I just say, like, guys, they're not an algebra equation. Like, they're a human being. You talk to them, they're nervous. Like, work the problem, figure it out. It's not. I don't know. I never found it to be so complicated of a situation. When there's people involved, you just deal with humans the way that you deal with humans. Like, you don't overcomplicate things.
Yeah, cool. Love that answer. I mean, that's if you're not in it for the people, someone told me this week, if you get into a career for the money, there will eventually be no money, right? And
That's so funny that you said that. Yeah. I
it,
I remember someone telling me I was at one of these conferences. Have you ever been to the Buzz conference?
negative.
Okay. So this is like one of those real estate agent conferences where it's kind of just like a big measuring contest. And
Yep.
I was sitting at this table, and there's this guy there who's super excited to be there and everything. And we're sitting there having dinner or whatever meal they were serving, and he kind of says how he's not a real estate agent. I was like, oh, that's so weird. You're at a real estate agent conference. Everyone here is an agent. You're not a real estate agent. Like, what are you doing here? He's like, oh, I'm in the middle of getting my license. And I just wanted to kind of learn more about what it is, being here, being an agent. Like, hopefully I can pick up some stuff. And I was like, oh, okay, yeah, that's cool. And I said, what are you like? Why are you doing this? Why are you getting into this business? And he said something I'll never forget. He goes, I just love houses. And I was like, oh, this is as much as it may feel like this is a business about houses and real estate. This is not. This is actually a people business, very much so. So it's funny you said that. That was my thought exactly to him.
Yeah, and you know what I mean? If you love construction, it's not crazy to think that you could get into the construction side of sales and have a fairly decent career, but your conversations with the end user may not, revolve around their family needs as much as it might be, here's why you should go with this type of construction or house style or whatever. And it's good to have both sides of that. I think it's good for all of us realtors to have a basic understanding of every facet of the industry. So understand economics as much as you need to, understand construction as much as you need to. But at the end of the day, we end up acting basically like a guide to walk alongside the people, and it's usually a family to get them towards eventually the house that they want to live in. And that's what we need to do, but you got to have a basic understanding of all the other stuff along the way. But if the number one goal is money or I love homes, it's going to be tough for you to really enjoy what you're doing because a lot of what we're doing is handling emotional people and helping them through that walk.
Hmm.
Um, so anyways, running a team, you said 15 realtors, two full-time administrators, two or three business partners. It's funny because I think everybody has that idea that they want to grow to this large of a team, but if you genuinely do love working with the end user, you end up not being able to do that a lot of the time, right? Unless you literally just work 24/7. Because you end up being HR, you end up being marketing department, you end up being, bookkeeping and accounting and budget overseer also. And then it's hard to actually be there and be physically present and invested in the end user, which the whole business is built around. And so if you end up losing that connection, then it's not going to it's not going to eventually be what you thought it was going to be and why you got into it in the first place, unless you did it in a superhuman way that I was unable to. But that's what I see playing out quite a bit.
Oh yeah, 100%. You have to wake up in the morning and enjoy what you do. I mean, it's not called fun, it's called work, but still you can't be hating your life going into work every day. That's there's a balance to be reached there, I think, and that's why I kind of stopped doing that and I just focus on, me working with the end user with just a rock star assistant and that's it.
Cool. Um, you're a big economics guy. I think I've met you at one or two conferences in the past, maybe not formally, but in passing or in conversation with a couple other people. But heard you on Tom and Steve's podcast the other day, and just kind of went on a tear about economics. And you seem to have more of an understanding or interest in economics than most people in the real estate industry. What are you seeing happening in the market right now? For context, we're, a week away from the next Bank of Canada interest rate announcement. We're in the third quarter of 2025. I mean, the York region, I would imagine you guys are tied into a lot of the craziness that's happening in the GTA, which you guys have two total separate markets, and one is resale and one is new condos. And I'm sure new housing's in there, but new freehold's definitely different than new condos, that's for sure. What's the year shaping up to? What did you think it was going to be? What's it going to look like moving forward?
Yeah, it's a question I often get, and I just happen to be uniquely positioned, like I said, as a nerd, where I'm able to kind of give some context to all of the mumbo jumbo and jargon that we hear out of Tiff McClem and other analysts and things like that, and kind of break it down simply for clients of mine, in particular, who are asking that exact question of like, where are rates going? And they're really, when they ask that, they're not asking where are rates going. What they're really asking is when are prices going to start going back up, right? They're
Yeah.
they're really wanting to know when this market's going to recover. And um, based on, and again, this is not my opinion. This is what the data and evidence suggests is that the answer is not anytime soon. Um, Typically, the Bank of Canada has to kind of remain at somewhat of a parity in the sense that there is some wiggle room, but at parity with the Fed's interest rate. And right now, we're kind of beyond or right straddling the edge of what our max kind of gap can be with them. Because if our interest rate is too far below the Fed's, then the exchange rate between the Canadian dollar and the U.S. dollar starts to really suffer, and then that's when we really start to get in trouble with trade imbalances, with the purchasing power of the Canadian dollar not being where it needs to be with our largest trading partner, and so economically, it's a really big risk. However, this is not something that can be easily manipulated in a way that it would benefit us because we're such a small economy in comparison, and we don't have the global reserve currency. There's no market demand outside of Canada for Canadian dollars, so we can't export our debt the way they can, and so that makes it very difficult for us. So right now we are at a point where the Bank of Canada has front loaded a lot of their interest rate cuts, and I think we're at the end of this cut cycle as of right now for that reason and for many other reasons as well.
Well, and for context, you can walk into one of the big five banks right now, talk to your mortgage broker. If you have decent credit and you can borrow from an A lender, you can get a 5-year fixed mortgage right now for 4.1. And honestly, like that's pretty great. Historically speaking, like isn't 7% closer to the average of what you can actually get a mortgage for in Canada? So as much as we might think that they're high, 4.1's pretty good historically speaking. It's just we saw 10 years of basically negative real interest rates.
Right. And I think people don't understand what real interest rates means. It just means that we're taking the interest rate and then deducting inflation out of that, and then that gives us the real rate. So if rates are 2%, but inflation is 3%, we have a negative real rate of negative 1%. So essentially, sorry, let me just hit my
And that's
focus
the
mode
reason
on.
that houses spiked the way that they did, right? You could borrow. I mean, I know I renewed a personal mortgage of mine in 2020 at 1.92 for 5 years fixed. Then housing went up in our market that year 20.5%. So if the inflation on housing was 20% and you can borrow at 2%, your your inflation rate really there is negative 18, right? The imbalance.
Yeah, and that plays into the rest of the market too. We have a massive market here for fixed income and things like that, where all those investment markets through hedge funds and money managers are all trying to escape the inflation tear that we've been seeing. And what they're looking at is they're looking exactly at that. They're looking at what's the real rate here, and if we're at zero, which we're probably at or negative already, when we're talking about real rates, you've got money that's burning a hole in your pocket, and you got to get rid of it. The issue is here that, like you said, when you look at the grand scheme of things, 4% is not so bad. It's really just about the relational value of what that means. So,
Yeah.
when we speak to, when I speak to my parents or other boomers and they go, oh, well, back in my day, we had 18% interest rates. It's yes, you did, but there was a lot less leverage in the system. And
We
so
also have another zero on the end of our mortgages, right? They were taking out mortgages for 50 grand. We're taking out mortgages for 500 grand.
right. So
Yeah.
the system overall has a lot more leverage in it, and when you have a lot more leverage in it, obviously you're a lot more susceptible and very sensitive to those interest rate peaks and valleys. And so, uh, given the not being anywhere near parity with the U.S. Fed rate, I think that that's going to be a big determinator if we're going to be dropping anymore. And I don't think it's likely that it's going to be happening. Right now a we're in fiscal dominance, right? And not just us, the US as well, where fiscal policy is dominating over monetary policy, meaning that, very simply put, governments are spending way, way too much in deficit. And when that happens, monetary policy will not have as much of an impact to right that wrong. And so I think that there's something to be learned here from all of this that Canadians should be learning is that, if they haven't learned it now, they should start to wake up soon to it, I hope they should start to, is that there is no free lunch, right? Like anything that the government spends, we pay for. And I think it was Milton Friedman who said the effective tax rate is simply whatever the government is spending. And what he meant by that is you're either paying for it through direct taxation or inflation, and almost always both. And
Yeah.
that's really what it boils down to. So
Yeah. I
I
had,
don't think
oh, sorry, go ahead.
Yeah, so I don't think we're going to see interest rates be able to come much lower because the fiscal dominance and the deficit spending that Carney is now racking up. Who I don't love getting political on my shows, but it just everything's politics at the end of the day. Like you kind of can't help it, you can't avoid it. Those decisions are affecting us at the consumer level. So we can't really ignore that, or I think it would be not wise to. And right now, his deficit spending is larger than Trudeau's. And in order to do that, the government needs to issue and successfully sell bonds.
Yeah.
And when they're flooding the market with bonds prices are going down. And so investors are not very hungry for that product. What they have to do is raise the yield in order to entice investors. And one of the largest buyers is the Bank of Canada, right? So the Bank of Canada has to now agree to buy these bonds to print the money to fund their deficit spending. And when they're doing that, there's an implicit understanding in that, well, if you're going to push these bonds onto my balance sheet, I'm not going to be able to lower interest rates. That's simply the way that it works. So I think Canadians need to understand that deficit spending at the fiscal level, and that policy that we're seeing around that is affecting how much we're going to have to pay for our mortgages on a monthly basis.
In my last statement, I said negative real inflation. What I should have said was negative real interest rate. But what you just touched on is big because it was in the fall when Freeland resigned. All right, Trudeau was on the plane, didn't find out until he landed that she resigned. She was slated with presenting the budget, in which case they went into I think a $62 billion deficit. If I'm not mistaken, it was 61 or 62. The planned or projected was around 40 or 41. So it was a 50% overage, and she was slated with presenting that to the public, and then so she quit. And then Carney like hold my beer. Let's do 90 billion this year and the next year and the next year and the next year. And to your point, okay, how's that going to get funded? And there's this whole, elbows up. Canada doesn't need the states. You you hit the nail on the head right there. We do need the states. They're our biggest trading partner. We can try and sell oil to Europe, and it can happen, but there's a pretty big logistical problem between us and Europe. So it still does make sense for us to trade with the US as much as we can. And as much as the Bank of Canada or the Fed is supposed to be independent of what's happening in politics, it's pretty funny that you have like Trump online on Twitter right now, just like pounding Powell saying the rate's got to fall, the rate's got to fall, the rate's got to fall. In Canada, you go to Parliament Hill in Ottawa. I went there for the first time last year, 2 years ago, and then learned that the Bank of Canada is like basically right across the street from Parliament. So are they independent of each other? Yes. Do they act independent of each other? Meh, especially like you hit on there. And I didn't realize that that's how it works, that the Bank of Canada is the largest holder of bonds from the government of Canada. But now all of a sudden that really makes for, I guess, a spaghetti salad of policy.
Yeah, that's something that I think we're probably coming to an end of a financial era that, because humans have, when we're talking about the grand scheme of things, short lifespans, there's a very short memory as to how the economic system works in the grand scheme of things. And I think people are not understanding that right now we are in an economic situation that is, I mean, really, when you break it down, a 50-year experiment, right? Where we have fiat currency backed by nothing going off the gold standard in 71. Ever since then, I mean, this is an experiment. We didn't know what would happen, and we're seeing that experiment clearly failing. There's no question about that. But I think it's the fact that people don't really recognize that this is an experiment where they kind of just assume that the correct decisions are being made by the people in charge. And the more correct assumption would be the opposite, that they're not making the correct decisions. And it's not that they're able to or not able to. I was explaining this on Tom's shows. It's that when you really boil down economics and the mathematics of it, it's not possible to make the right decision. So it's not like we humans with our, silly little monkey brains can like figure this out, because these are complex adaptive systems. Like they're not, we don't have the compute able to do that in our brains. Like we can't just look at a bunch of numbers, which by the way are all highly politicized, right? And you talk about inflation, and people don't understand what that means. They just see a number, they attach a CPI letters in front of it and go, this is it. But really, inflation is much more difficult to understand than that. It's actually completely relational. You can measure inflation in anything, right? You could measure it in housing and it's going way up. You can measure it in something a little more, if we were to really go into the theory, in something more stable and has a stable stock to flow ratio like gold, and then you get a more true understanding of what's happening. And so it's not, and people also confuse inflation and they use that term with things that are not inflation. So for example, you'll see the media say, well, the tariffs are inflationary. No, the tariffs are not inflation. The tariffs are a tax. Inflation is the expansion of the monetary base. And so when people say inflation, they just in their minds mean prices are going up. But no, 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 no. It's the rate of monetary inflation that's affecting the relational price of everything going up. So I think people don't understand these concepts at a more fundamental level. And so that's why they're kind of ready to jump on the train, like you said, of like elbows up. Elbows up doesn't mean anything, right? Because you can have all of the diehard, Canadian nationalists saying elbows up, but at the same time, they're investing in mutual funds that are diversified across the Mag 7, which is and teachers' pension funds that are all, buying Google and Amazon stock. I mean, they're not. It's elbows up when they go to the grocery store and they need to choose between Canadian maple syrup and American maple syrup, but like where their money's actually going is it's all into American markets. And so it doesn't really make sense. But then again, a lot of things when you look at it at the face value where the media is portraying is doesn't make sense. So I mean, it's not really a surprise.
Yeah, and one thing that you mentioned there too is like we're just our behavior in 2025. Like I remember when I bought my first house, our goal was okay, like how long before we pay this off and don't have a mortgage? People don't even look at cars that way anymore. Like they're offering 7 years and 8 years financing on cars, but I don't know very many people that keep their cars 7 or 8 years in the first place. And then by the time they get to the end of that financing period, they're sick of the car because it's not brand new anyways. Like gone are the days of delayed gratification. I remember when I bought my first used vehicle, I was super proud of that thing because I paid cash for it. And I was like, okay, well, nobody can take this from me. And I loved not having a payment. And then I got a vehicle with a payment, and 6 months later, the new model comes out and it's got different headlights. And now all of a sudden, I need that one, and mine's not cool anymore. And I'm not satisfied with what I had. Meanwhile, when I paid cash for something, I didn't care about what the new model looked like. I was like, I don't have a payment. This is freedom. This is amazing. And our parents' generation, they generally paid for their houses. And once everybody got really comfortable with high levels of debt, now it's not like I need the house paid off anymore. It's what is my equity? But the equity is it's not a real thing anyways, because to your point, if more money's being injected into the economy and real assets like gold or real estate are going up in value, the inflation that's in there or the equity is like a ghost value, right? It can
Right.
buy less today than it could buy last year. So it doesn't really matter how much equity it is. And then our let's say it's an investment property, your capital gains is based off of your income rate. So your income could go up, but then your tax rate goes up accordingly. Well, then guess what? Uh, Land transfer tax is a ratcheted rate too. So it's like this fallacy of, oh, my equity's, $1 million now that this $200,000 home has gone up to $1.2 million and I haven't refinanced it. Now all of a sudden I'm a millionaire. Well, the bar for millionaire moved significantly along that line too. If a house went up 5x, being a millionaire is one fifth as effective as it used to be too, right?
Right. So the couple things that you mentioned there that I do want to touch on, because what you pointed out is very it almost seems obvious, but when you really dig deeper into it, I kind of want to dovetail a couple of things here that
Sure.
that
Go
you
nuts.
were talking about. So, um, right now, what you just described is actually the best case scenario, where you actually do have assets to protect yourself against monetary debasement.
Yep.
However, if if the poorest people in our country are voting for more fiscal dominance, which essentially, I mean, you could brand it as socialism, however you want, right? But basically, more government intervention and more government monetary stimulus, it's just more money printing. It's just more monetary debasement. The people who are the poorest in society are actually the most vulnerable. So the way that you described it, it's like, yeah, you're basically running on a treadmill, okay? And you may be able to outrun the track a little bit, but like it's going to be really, really hard, right? It's always pushing you back. But the people who don't have any assets to protect themselves, those are the people who are voting for this policy, and those are the people who are actually dying by 1,000 cuts, right? Is because they don't have any assets to protect themselves against the monetary debasement, and then they're getting slammed with like all the other type of taxes that people like me and you, who are business owners, who may have corporations, who whatever, can actually protect ourselves from. So, for example, the most regressive form of taxation is a consumer tax, right? Consumer sales tax. So, like, if we look at HST, for example, the poorest people in our society not only don't have any assets to protect themselves against monetary debasement, but they're also paying HST on everything that they're buying with no ability to actually collect ITCs, right?
Yep.
And income tax credits. So they're getting screwed the hardest basically, and they're voting for it. They're actually, it's kind of the Solzhenitsyn kind of goes back to what he said, I think, with the road to hell is paved with good intentions, right? Is that there's always this idea behind it that it's going to actually redistribute wealth in a way that's more equitable and this and that, but it's not actually true. It's the people who are the closest to the money printer who get it you know flowing into their coffers first, and then it'll take some time to trickle throughout the rest of economy, which is why things like UBI and things like that are the most fundamentally dangerous, because it's the most reckless form of monetary debasement. So
The
that number
gap
one.
between like the middle class and the upper class has widened so much and everything's gotten so expensive that the middle class is becoming the lower class, right? Or you could argue it's just being wiped out altogether.
Correct. And so the poor will get decimated in all of this.
Yeah.
The ultra wealthy will get much richer, and the middle class will eventually get pushed down if they're not really careful and if they're not able to understand and be able to navigate strategically. Another thing that you pointed out with Trump was him hammering Powell. And I think that this goes back to what we should be expecting in this new era of economics that we're approaching, is that there was always a promise that there was a separation between the central banks and the state. And Fed independence was what people relied on, especially in 1971, when Nixon took us off the gold standard, well, the U.S. off the gold standard. It was this promise that, well, we have the petro-backed dollar and there's always Fed independence, so don't worry about it. But now we're clearly seeing that Fed independence being, that the veil being kind of torn down, and we're understanding that, oh, no, 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 the Fed is not beyond politics, right? The central
Yeah.
bank of Canada is not beyond politics. It's all intertwined. It's all just people at the end of the day. And so you can't look at the stats, the CPI, however you want to measure it, and you can't look at unemployment however you want to measure that, which is highly political. And we can get into those and how they're highly politicized and how the measuring sticks are constantly changing to fit their narratives and to fit their and service their needs. um, how you can get 12 guys in a room around a board table and decide what the cost of capital is going to be. It's just mathematically not possible, right? You have a complex adaptive system like the economy, and you can't calculate it without a distributed basically computational system. Like you need distributed computation. And that's what a free market is. Like when you and I go out and we're operating in the world is we're mini little calculators that are trying to cooperatively and competitively work with and against each other in that marketplace. And that's how price discovery really works. And so when you really think about the natural state of the natural state of the economy is actually deflation, right? So if you think of like a barter system or something like that, we're getting into the weeds of like some basic economics here. But if you had a barter system, if we were trapped on an island, right, it wouldn't be that me and you do everything, right? We would divide and conquer the roles based on who's best at what, right? Like I have a
You
bad
raise the
back.
goats, I'll harvest coconuts, and then we'll
Right.
trade when we need each other. Yeah.
Right. Like I have a bad back. You're probably better at swinging the axe to get the tree down, right? But I'm good at fishing, right? Whatever. So if we divide and conquer, then we end up with more, right? And that's what the natural state of the economy is deflation, is we get more bang for buck. But when we live in this fiat economy that is constantly under monetary debasement with deficits, spending and fiscal dominance, uh, we just got used to it after so much time that like this is
Yeah.
what it is, but it shouldn't be.
So it's an experiment. When do when does the experiment end? Or does it self-implode and then the next experiment starts, or what happens there?
Um, yeah, so I think we're seeing certain new financial um, let's say avenues appear now, which are becoming more and more attractive to people who are willing and able to understand what the scam is, right? And fiat is essentially just a Ponzi scheme. Like if you really boiled it down and you really wanted to slap a label on it that was easy to understand, that's essentially what it is. And with things like Bitcoin, gold, it's not just real estate, right? Because real estate's been typically a very good way to outpace inflation. However, real estate actually doesn't have a very stable stock to flow ratio. And so you get
It's
these
not
ups and
liquid
downs.
either. Yeah.
So it's not liquid, and more importantly, I think it's the stock to flow ratio. It's how constant is the new flow of real estate onto the market? Like how many more deliveries do we have this year than last year? Is that a stable and liquid flow? And if it is, then you can base more of your economic decision making in a more logical way based off of that. So real estate's kind of been like okay for the longest period of time, but we have some problems, and immigration being one of them. That's going to send us on a roller coaster. So expect real estate to kind of be pretty wavy for the next little while, and that's kind of those typically are the types of signs that we'll see that are the canary in the coal mine for fiat just not working out, right? Is that the booms and busts are going to get bigger and more aggressive over time.
And so for anybody that might not understand the concept of fiat, it's money that's not backed by something physical that has intrinsic value, right? Or
So
it's
no,
it, it
um,
it's not infinite.
right. So I think so. If you the word fiat, in I think it's Latin origins. The word fiat means force, and that's essentially what it is that this is the first time that we've had money that you were forced to use that didn't really have a rationale behind it. So for example, like when we had gold coins, were they minted? Sure, they were minted. Were they then chipped off later and reminted so they could steal and debase it? Yeah, okay, they were. But gold always had a stable stock to flow ratio and still does, by the way. Whereas fiat doesn't. So fiat actually just means money that we are forced to use, that the free market did not choose as the best money.
Okay. So I interrupted you. You said you had a few other things to pick apart from that one statement I threw out there that had about 10 other tangents on it.
No, I think I got them all out. I think I got.
Okay, cool. So one thing you touched on there was immigration and basically 20 gonna be 2019, 2020 through to 2023 record immigration into Canada. Um, and I think the current government and towards the end of our past government, they realized that they made an oopsie and they've basically turned off that tap now. My sister went and moved over to Australia and then came back. And I found it interesting that Australia totally keeps track of who's coming into their country and if and when they're leaving. So they know exactly how many people are in their country, give or take, at all times. And from what I've heard, we really don't keep track of our population that way in Canada. So we actually don't necessarily know how many people we have in the country. And when you look at what's been built for housing in our economy over the last 4 years, it was condos until condos weren't cool, which that really tapered off in 2022. And now it's all built for purpose rentals. And most of these built for purpose rentals are actually registered condominium plans, but they're being rented out and not sold individually, which could actually mean that they could be sold as condos in the future, but very few single family homes being built. And so now you have this thing where you have a lot of people that are in Canada. Um, the government doesn't exactly know how many, they're guessing. Some were here on student visas, refugee, maybe they're permanent residents. They would have total, track record of all that. But they don't necessarily follow up on the expiry of temporary permits and visas. And so we have this thing where we don't really know how many people are here. And we have a lot of different governments in Canada, but none of them really talk to each other. So the provincial government doesn't necessarily know what's going on at the Fed level and vice versa. And so we've built all these built for purpose rentals, but nobody actually knows who's living in them. Is it Canadians? Is it people that are here on student visas? All that kind of stuff. And then you have this tenant board in Ontario that really just it's interesting. Like they don't enforce rules that Ontario sets out in every other regard. So in one example would be the government of Ontario would want you to properly permit a basement apartment. The landlord tenant board doesn't care about that. You could rent out your shed and call it 123 Main Street Unit B. That now qualifies as a housing unit and falls under the LTB's jurisdiction. So there's probably going to be this balancing period of time where we wait and see how many people stay in Canada permanently and some will leave. And I've even seen this with some of my tenants where the grass wasn't as green as they thought it was going to be. They came over here and taxes were really high. It's hard to get a good job that's stable that you can keep. And yeah, housing's really expensive. The wait lines at, the hospitals are quite long. How long do you think that it's going to take for this problem to kind of work itself out where people leave or end up becoming permanent residents? Then we find out how many of these new rentals we actually needed versus didn't need. And then what's going to happen next in housing?
Oh boy, that's a big can of worms. Okay. So the immigration, I think, what does it do for the government? I think is something that we should really be talking about. Is like, what is the effect? Why are they in such a rush to bring in so many people? What was the rationale behind it? And what does it accomplish for them? Well, it accomplishes a few things. Number one is it it effectively masks the GDP to debt ratio for them. Because when you increase immigration very, very quickly, what you get is an overall increase in GDP because more people are here, which means more economic activity, more people are spending. However,
But not
again,
productivity.
correct, right? It masks it because if you look at the GDP per capita, it's way down. And so what it does for them is it gives them more opportunity to be able to politicize the numbers enough to be able to say we can spend more, right? We can afford to do that because our GDP to debt ratio is not as bad as you think it is. So even with their masking, let's just get one thing straight. Our GDP to debt ratio is over 100% right now. That's given their politicized numbers, given their fugazi measuring sticks of everything, right? That are constantly changing and shifting to serve their needs. So that's number one, what it accomplishes, right, is they can turn around and say to the public, no, 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 everything's fine. The other thing that it accomplishes is that it really helps um, governments to grow in size. What it does is it puts more pressure on all of the social safety nets that we've had in place historically for Canadians, like healthcare, housing, education. You know, just with those three alone, you get into a massive feedback loop of, oh my gosh, the healthcare system is so strained. We need to spend more on it, right? Oh my gosh, we don't have enough housing. We got to correct that, right now. And so what it does is it allows government bureaucracies to kind of feed themselves into more power, into more control, into bigger and bigger bureaucracies to manage and to try to solve it. So the government ends up becoming kind of like this, just like the central bankers, is they're the arsonists and the firemen at the same time, right? Is they're doing something to strain the system. So they're saying, well, we need more system. We need more us. We need more money. We need, right? And this is where we get into the hypocrisy, because if you look at those people sitting in parliament, right? Look at their salaries. It's all pegged to inflation, right? But you look at any other, full-time employed worker out there, is theirs pegged to inflation? No, it's not. It's not inflation adjusted. And so they're constantly needing to justify and re-justify their own out of control spending. And it's a very easy thing to do when you just slam a bunch of immigration into an already very fragile system. So that's kind of the why is it helpful for them, is that it does serve them, it does serve their needs. But overall, how it's going to affect housing is I think quite obvious, right? Is um, they're really looking to try to overload the system, manufacture demand. And the issue is that they're manufacturing demand with people who can't afford it. So it's like you bring in a bunch of people who are not fiscally just, able to actually buy the units at these prices. You do that long enough, eventually you're going to see what we saw, which is, yeah, they may not be able to afford it now, but they have a rich uncle in China or a rich cousin in Iran who's trying to get their money out of those countries because of their terrible oppressive regimes. And they have really very restrictive capital controls that are stopping that. So they need to find a way to get it into somewhere else. And where would they like to put it? Well, somewhere it's appreciating, somewhere it's stable, and everybody loves real estate. So okay. So you get Canada end up being kind of like the money laundering capital of the world, where we're just trying to help others get there. And so what do? They send their kid or their cousin or whoever here as an international student, and then next thing you know, that kid or that international student's driving around in a Lambo and picked up 5 condos, and there you have it, and you restore the housing market. Everybody's happy. You increase tax revenue. Right? So they're hoping that that's how it's going to play out, because traditionally that was how it played out. But again, these economies, any economy, is a complex adaptive system. So just because it played out nicely before when you did that last time, it doesn't mean that it's going to play out again this time, because there's now more factors built into the equation which you can't predict.
Yeah, and interesting there too is when you bring in a bunch of people that can't afford the housing, uh, but they need housing, then who ends up benefiting from that? It's REITs and people who have access to large amounts of capital that can house, hundreds of families rather than one at a time. And the craziest thing about that is most of that, multifamily construction financing comes from a branch of the federal government, which is CMHC.
Yeah, so that's also a very scary one to unpack. And I know I'm going down all these like rabbit holes on this stuff, but CMHC effectively, just like Tarion, just like all these other backstops, quote unquote, are effectively insolvent, right? Because if there's a bank run on CMHC right now for all of their bad debt, they wouldn't be able to pay it, right? And the only
Yeah.
backstop there is more money printing.
Yeah. Federal government. Okay. So before we chase that rabbit hole any further, maybe a good idea to kind of change gears. So I got a question for you, and
Mhm.
based on the statement earlier that you think um, it's unlikely that interest rates are going to lower much more or any more this year in 2025. Assuming I'm a buyer in the market right now, I'm considering getting into home ownership. Maybe I'm an investor. Maybe I'm looking for my first time home. Maybe I'm looking to move up. What specifically about this point in time that we're in would you speak to as far as advice? So I was waiting for home prices to crash and I was waiting for interest rates to get lower. What does that mean for me now if it turns out interest rates ain't getting lower?
Yeah, that's a fantastic question because that really kind of grounds us here in this conversation, which I really appreciate. Um, Basically, what I would say to people is something that should be obvious, but has become a bit elusive in thinking in Canada because we've commoditized housing so much. Is that um, if you're not on the property ladder, if you don't have real estate and you want to own real estate, you you should you should make every effort to make sure that you're stashing your money in a hard financial asset like real estate, because that's ultimately going to protect you from the monetary debasement. If you're an investor, though, I was speaking to primary residents kind of situations back then. If you're an investor, though, I wouldn't say that this is a good thing to be investing in because you have in Ontario, anyways, like you mentioned, the landlord tenant board. I mean, it's become a very low yield, high risk investment, right? Like your holding costs are going to be extremely high. If you're holding a condo, maintenance fees are just a black hole for money. You never get it back. So you're gonna try to make an equity play, right? Knowing that the cash flow is not really going to be there. And if something happens where that tenant just decides they wake up one morning and said they're going to stop paying you, you're kind of screwed. So there's not much you can do. You don't really have any recourse. You've basically been neutered by the government. So what ends up happening is real estate, from an investment perspective, has turned into a low yield, high risk investment. And I think that's why investors are being jettisoned from that market and are really just kind of scrambling for the exits. If you're already on the property ladder, you want to move up, you want to do something, you should be making a move that is financially responsible, that is very conservative in nature when you're breaking down the numbers, and that is there to serve you and your family. You should not be looking at this from a financial perspective. Primarily, you should be looking at this from a perspective of, is this the right thing for me and my family right now? Do we need more space? Right? Don't view it in any other way, because really we've seen that a lot of people who tried to do that basically got slapped real hard in this last 5 years.
Yeah, and I mean, it looked sexy when everything was appreciating at a really high rate really quickly. But when you take away the appreciation, it's not as attractive as it looks, that's for sure. We talk to a lot of families and often get the question, as I'm sure you do, is, well, what time would it make sense for me to put my home on the market? And our answer simply is, look, if you're an investor, try and time the market all that you want. If it's your primary residence, please do not try and play the market with your primary residence. At the end of the day, you need a place to live. You should sell your home when it suits your family to sell your home and buy another one, if you're looking to buy another one, that is. Because if you're waiting for the market to go up, well, yeah, you might do really well on your sale if you get it right, but you're going to be buying in a relative market unless you're moving to another area or you're renting for a period of time or whatever. But if you're gambling with your primary residence, then you risk losing out if your predictions were wrong too. And I saw people do that on the way up because we saw prices come to a level here in southwestern Ontario. We're right near Windsor, and we saw people in 2017, 2018 go, homes are worth like double the most they've ever been in this area. There's no way that they could stay here. So they would sell and they'd go rent. But then the bull run continued for another 3 years after that. And now they can't buy the entry level home, and they were selling, the family home that typically you keep for 25 years until the kids move out. And so they used their primary residence as an investment, and they viewed it that way, and they gambled it based on emotion at that time. But you can't gamble with your primary residence, or in my opinion, you shouldn't. If it's your investment property, well, you should always be prepared to lose your investment anyways. Regardless of any investment you go into, you obviously need backstops and you got to do some risk testing and see what your appetite is for risk. But you shouldn't be investing money that you can't afford to lose. And that's why I think with your primary residence, don't gamble on timing. Move when it suits you. And like you said, do it responsibly.
100%. This is not the time to be gambling. And also, just to kind of dovetail what you were saying, is that if it is your primary residence, try to buy and sell in the same market, right? So you're trying to mitigate risk on the time, because timing is very difficult right now. We can see, and I did see, I don't know how your market was in 2017, but in 2017 we took a big dip here that it only lasted about 18 months, but it was pretty dramatic. And I remember I sold three houses in one specific neighborhood in Q1 of 2017. And then they all wanted long closings, those sellers, because they needed time to find something. And, I let them know what the risks are, right? If the markets flip and appraisal values come back short. Anyways, they all still took it. And, we had to renegotiate after firm deal leading up to closing because appraisal values were coming in hundreds of thousands of dollars short. So that can
Man, oh
happen
man.
too. Yeah.
Why did that happen in 2017?
Oh boy, that was the back in the Win government. She was oh man, I couldn't stand her, but she introduced a foreign buyer tax, which basically spooked the government at the time, and then I guess interest rates also went up right around that time too a little bit. And it just shocked the market. And we did have very loose capital controls from China at that time, and buyers basically got spooked. They said, this is the thing that's going to break it, and you know, markets were very volatile at that time in particular. So we did see in York region in particular a big correction. I mean, in some pockets it was like 20-30% within like 8 to 12 months. And it was pretty scary stuff. Our months of inventory went from 1 to like 8, 9, right,
Wow,
within a matter of months. And so it was a big correction, and some people got caught in the middle of that, and it's very dangerous. So that's one thing that I would add, is that if you're moving up, you're moving down, but you're trying to stay in the market, then just buy and sell in the same market, and try to minimize the gap between the buy and the sell.
makes sense. Um, we've been kind of on like obviously prices spiked. I guess in York, you guys probably saw your run start in kind of oh 05, oh 08 in that range, and it was a bull market basically all the way until 2022, Q2. But Canada as a whole, we have not come anywhere close to the pricing levels that we saw in March, April of 2022 since then. And I always have to level with people and say, hey, look, we went up 30% in our market here in 3 months, and then down 40%, and then came back up to that 30 dive. And we've been basically level since then. So in my market, our pricing right now is very similar to where we were as an average in 2021. Um, do you think that this would be the bottom of the market for pricing? Is there room to fall yet? Is it going to trade sideways for now, or is there a case to say that some asset classes would actually trend up from here?
I have no clue. I really don't know. I don't know where prices are going. I just try to watch the kind of macro picture as much as possible and try to understand the long-term effects of things, and not like I don't really. I'm very, it's so funny. Like in all of this and all of talking about money and everything, I'm very price agnostic. Like I don't really care. I just care that what I'm holding, I believe to be something that um, is uh, like inflation resistant, more so than anything else, because eventually that's going to be the thing that really eats at everyone slowly. And so I have no idea. Prices could fluctuate. Prices could go up. Like if we see a big, U.S. Treasury sell off from Japan and the carry trade collapse, we could see instant stimulus from that, right? Like we saw with, or Silicon Bank Valley, any kind of crisis that creates panic to inject liquidity could boost prices temporarily. But overall, prices will just naturally continue to inflate because the monetary debasement is ever present and constant. I think it was Milton Friedman who said that it's an ever present and constant phenomenon.
That was a
So
very
as
honest answer, and I don't
Yeah.
know. And it's the truth. Who does, right?
Mhm.
So if your theory is, well, I want to make sure that the assets that I'm holding benefit from inflation, they have true value. Um, where would you recommend sticking money right now or capital if you had some?
This is where people
Not
start
not
to
financial advice, ladies and folks,
Yeah, yeah.
ladies
I
and
I
gents.
mean, yeah, it's not financial advice. I mean, all that stuff, yada yada. People shouldn't listen to some loser like me on YouTube and start like doing stuff. But what I would say is that this is where people start kind of looking at me a little cockeyed and weird. Is because I say hands down, Bitcoin
Yeah.
is the best place to be, because again, you're not, when you're buying Bitcoin, you're buying a bet against the system. That's what you're doing. You're that's what it is. And people who don't understand it just chalk it up to not understanding it. But that's the same narrative that we heard in the 90s about the internet. So, oh, I just don't get it, right? I don't know if you remember that, but that was a lot of people saying like, "Oh, my business is doing like it, it's all this and it's all that." And I have people walking by my store and like then 10, 20 years later, they're like, if you don't have a website, you're out of your mind. Right. So it's
Yeah.
like if you don't have an online e-store, you're crazy. And so what I would tell people is like, if they haven't yet really done the reading, if they haven't yet researched and looked into it, that I would highly encourage them to do so. And you don't need a lot of time. You spend maybe, let's say, 10 to 100 hours of just straight like audiobooks, podcasts, really start to understand what this thing is. And then you'll understand that Bitcoin itself is, forget what people are talking about with other stuff, with Trump coin, whatever. Just forget all that stuff. Bitcoin itself is
Okay,
the,
that's what I was going to ask. Is
yeah,
crypto or specifically Bitcoin?
no, Bitcoin only. And I've done my homework on this. I've really gone down the rabbit hole. Bitcoin only is the only first, it's the first and only decentralized, open source, digital commodity without an issuer. Okay. And all those words mean huge things that we can unpack, but that is what it is. And so eventually, Bitcoin is a nuclear reactor that just goes and it doesn't stop. And it doesn't have an issuer. It can't be corrupted. It's an open source, decentralized technology. So it's like, people don't understand what that means, but like, let me explain it in very simple terms for people who are listening. Okay. Is if I were to ask you, um, hey, Cody, I don't like this internet thing. Call up the president of the internet and you get him on the phone and you tell the CEO of the internet that we want some changes made. You would be like shrugging your shoulders at me. You'd be like, "What are you talking about, man? This is it's a digital network. Like there's no one in charge, right?"
Yeah.
Um, and so then when we look at protocols that we use every day, we don't think about why we use them, but there's a very good reason why we use them. So, for example, we used email to communicate to get on this podcast. Yeah.
Yep.
Do you know why we use email? Do you know why it's not something else?
It, I don't know, traceable.
Right. People don't know. So I went down the rabbit hole and I learned about this. So email is an open source decentralized protocol that is called SMTP, Simple Mail Transfer Protocol. That's what email is. And the reason why we use email is because no one can top down control it and it's open source. So if you send an email to this person, you know that, oh man, this is actually protecting me in a legal framework. I can always use this. Why? Because it can't be corrupted. So that's why we use it. So the technology on the internet always gravitates towards open source decentralized protocols. Always, every time. The open source decentralized protocol will eat all other protocols, right? That's why we don't
because they can't
use
be manipulated.
yeah, that's we don't use an intranet like China has, right? If everyone was so obsessed with China's intranet instead of an internet, we would all use that, but we don't because why would I want to do that? Right? Same with any website you go on is HTTP, hypertext transfer protocol. That's what HTTP is. It's a display
Interesting.
protocol for displaying text. And so if I were to tell you, hey, Cody, the year is 2002, and I can sell you a fractional piece of the entire pie of SMTP or HTTP, would you do it?
In 2002, I probably would not have.
Right. But now, with hindsight, if I were to ask you now, I can send you in a time machine back to 2002. Would you buy a piece of HTTP?
I'd buy the whole pie. I'd sell my house and buy the whole pie. Yeah.
Well, there you go. Okay, so that's it. So Bitcoin is an open source decentralized protocol for value. And that's what it is. And that's why it's widely considered now between BlackRock, State Street, all these big financial institutions as pristine collateral is because I don't need to worry about collateralizing a house that can burn down. This stuff will never go anywhere. It's pristine collateral. It's perfect. I can always verify it. I can always check on it. I can always secure it. It's forever protected, and it is a value protocol, the first one ever. So that's kind of how
Now,
I would explain it.
for people that are skeptical, hey,
Hmm.
I've heard about all the scams, things like that. All the I love watching scam documentaries. Like whether you know what, crime documentaries in general, I think are fascinating. Whether you're watching like the movies based on all the 1980s, drug flow into the US and lately it's been, like Dumb Money, like when they're following the whole GameStop saga and Reddit and things like that. But then there's been quite a few on like Bitcoin exchanges.
Hmm.
And was it who was the guy in the Bahamas? Sam
FTX,
some.
yeah, Sam Bankman
Right, so
Fried.
all the scams have been on the exchange level, not
Yes,
on the asset itself. It's always been
yes,
from the person that got involved in the exchange of it, correct?
yes. So that's what people equate it to. Um, well, Bitcoin's a scam. So let's take something where we have something that's recognizable that everyone can kind of understand, which
Well,
is,
housing. Let's use housing.
you know what? Let's go simpler. Let's use gold. Okay?
Okay.
Because gold is a commodity that's everywhere. It's got a stable stock to flow ratio. That's why we used it as money for millennia. Okay? Gold. So if I were to say to you, okay, that I put my money, okay, I took my gold, I had bullion, I had gold bars, and I paid a third party custodian to custody the gold for me, okay, in their vault. And then I went to go check on my gold and it was gone. Would I come to you and say gold's a scam? Or what would you say to that? You would say gold's not a scam. It's just the person that you paid to custody it for you was a scammer, right?
Yeah.
So that's the same thing with Bitcoin. There is no issuer with Bitcoin. It is simply a network. It is a protocol.
So once they can, or maybe they have already, and I'm out of the loop, but once they can figure out like a common way to own it, house it, store it, trade it without human interruption.
Yeah, so
Uh,
that's been true since day one. Since day one of Bitcoin in 2009, you've been able to self-custody Bitcoin. That's the whole point of Bitcoin.
okay.
Yeah, it's
Just
just
people
people
don't
chose. Yeah, people were just too stupid to basically. It's just people and not stupid, like lazy. Like people were like,
ignorant.
yeah, yeah. They were just like, oh yeah, I bought it on this exchange. It's on there. But like they never thought to themselves, maybe I should move it off of there and self custody it and hold my own private keys and hold the coin instead. So they just
Or was
didn't
it
do
so
that.
that they could use a fund, or sorry, like a tax shelter to buy it? Like, hey, I want to buy it through my TFSA, or my RSP, so I have to
That's
buy
different.
it.
That's different. You're also taking third party custodial risk with that for sure, but
Yeah,
you're not actually buying Bitcoin. You're buying an IOU of Bitcoin, right?
yeah,
So
yeah.
that's
Because I
different.
can't afford to buy one Bitcoin unless I sell a whole bunch of stuff, right? One Bitcoin right now is trading, is it 70, 80,000
No,
USD?
it's over 100.
Oh, is it? Okay, well, that's how
Yeah,
far out of it I am.
so Bitcoin itself is divisible into by 100 million. So a fraction of a 100 millionth of one Bitcoin is called a Satoshi. And so you could buy as much or as little as you want. You don't need to buy one.
Okay, I was under the understanding that people were like buying it in their tax shelters through a fund because then that way they could afford a smaller part of it. But I obviously haven't researched it enough to know about Satoshis.
Oh yeah, yeah. You can buy as much or as little as you want. It's totally fine. People are just buying it through their TFSAs because they're like, oh, it's tax shelter, this and that. Look, at the end of the day, you do what you're comfortable with. But you asked me where I would like. I'm pushing all my chips on orange. That's my move. Is that I really think that Bitcoin is the best place. It's the most inflation resistant and not just resistant. It's outside the system. It's beyond collusion. It's beyond anything that we've understood. It's really just this monetary phenomenon that in 10 years from now, people will look back on this type of podcast and like, it's I've been in it a long time and all the stuff I watched back then has aged very well.
Um, and it doesn't have borders, right?
Yeah, it's permissionless, right? So it's like imagine if I were to like people are like, what's its inherent value? It's like, and what do you mean by that? Like what do you mean by intrinsic value? Do you mean that it has a value other than money? And then you have to ask yourself, should money have a value other than just money? Right? And then
Yeah.
you ask yourself, well, the money that we do have right now, it's fiat money, it's forced money on you. Is that if you took your money, which you believe is your representation of your energy, right? That's what it is. It's your time and your energy represented in a numerical fashion with a forced medium of exchange, let's call it. If you tried to send $100 billion across the world on a Sunday at 9 p.m., could you do it?
Probably not, but with Bitcoin, I'm assuming the answer is yes, easily.
At the speed of light, my friend,
Yeah.
permissionless.
Cool. Well, that's probably a good place to wrap it up. It's been a good conversation. Adam Nadler, ladies and gentlemen. Adam, if people want to follow you, learn more about you, follow your podcasts, your YouTube videos, where do they do all that at?
My company is called Vision Real Estate on YouTube. It is at Picture Your Dream Home. We have a podcast that's growing nicely, and would love to have you on there. I think we have booked in for next week, so that's how you can find me. And oh yeah, you just Google my name; I should pop up.
Cool. Thank you so much. Appreciate it, and hope everybody enjoyed the conversation.
Take
Thanks,
care,
Adam.
everyone.
Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.